The world's largest gas field is under attack. And your energy bills, food prices, stock market are about to feel it. Just 20 days into the conflict, Iran's retaliatory attacks on Gulf energy infrastructure have sent global markets into panic. South Pars holds 1,800 trillion cubic feet of gas, enough for 13 years of global demand. Damage here isn't temporary. LNG plants like Ras Laffan take years to rebuild. Europe's LNG prices spiked 30% overnight. India, importing 40% of its LNG from Qatar, will face severe price shocks. Gas shortages in one region ripple across the globe. Markets are already reacting. India lost 12 trillion rupees in a day. The S&P 500 fluctuates violently, and Europe's energy stocks are tumbling. Diesel prices are back at 2022 levels. Rising energy costs affect transport, agriculture, and household budgets, directly impacting your wallet. India's fertilizer plants are operating at 70% capacity due to gas shortages. Urea imports are high, and if costs rise, food inflation will hit hard. Propane and LPG shortages also hit steel production in medium and small-scale enterprises. Many may reduce output or even lay off workers. US and Israel actions cost the Pentagon $200 billion. Taxpayers pay while global oil and gas markets face uncertainty, a lesson in how geopolitics directly impacts economics. Even if the war ends tomorrow, LNG facilities like Ras Laffan take years to restore. Expect persistent energy price volatility, inflation pressures, and supply chain disruptions. For investors, this means hedging against inflation, diversifying energy portfolios, monitoring global LNG developments is critical. The Middle East conflict isn't just political, it's financial. Your gas, food, and investments are all at risk. Stay informed, watch the numbers, and protect your assets.